Hello and welcome. Tax audit plays a very important role in improvising the tax administration and overall compliance by taxpayer, thereby contributing in the growth of taxation and economy of a country. Therefore, this important task of conducting tax audit was entrusted to chartered accountants long back in the year 1984. As a regulator of the profession, the Institute of Chartered Accountants of ICAI has been responsible for ensuring the quality of tax audits conducted by its members. It came out with a guidance note on tax audit in the year 1985 and revised it time and again, thereby keeping ICAI members abreast of the changes that have been taking place in the tax audit report formats. Continuing its efforts in maintaining the quality of tax audits, two major steps were taken by ICAI. Firstly, introduction of unique documentation identification number, shortly called as UDIN, to curb the malpractice of tax audits conducted by non-members. The concept of UDIN has been widely accepted and is duly adopted by tax authorities also as a part of process of submission of tax audit reports. Secondly, formation of Taxation Audit Quality Review Board in 2018 to review the tax audits conducted by its members. The Taxation Audits Quality Review Board of ICAI conducts a three-tier review of audit reports submitted to the tax authorities and thereafter takes appropriate action with regard to non-compliances noticed thereof. The ever-changing utility of tax audit reports without corresponding change in the notified formats led to difficulties and confusion in reporting requirements of tax audit. This came to the notice of the board during such reviews, which are being brought to the notice of the respective tax auditors. Looking at the need to create awareness among the members, the board in the year 2020 brought out a publication named Approach to Tax Audit under Section 44AB of the Income Tax Act 1961. This publication is in the form of a checklist. This publication has brought out jointly with the Direct Tax Committee of ICAI. This said publication proved quite useful to the members. Continuing its efforts to improvise the quality of tax audits, the Taxation Audits Quality Review Board of ICAI thought it fit to bring out a publication named Study on Compliances in Reporting in Tax Audit Report, which will help and guide its members in enhancing and improving the quality of tax audit conducted by the chartered accountants. Section 44AB was introduced in the Income Tax Act 1961 by the Finance Act 1984 with effect from 1st April 1985, that is, with effect from assessment year 1985-86. This section makes it obligatory for a person carrying on business to get his accounts audited by a chartered accountant and to furnish by the specified date the report in prescribed form of such audit if the total sales, turnover or gross receipts in the business in the relevant previous year exceed the prescribed limit. For a professional, the provisions of tax audit become applicable if his gross receipts in profession exceeds the prescribed limit in the relevant previous year. As observed by the then finance minister while presenting the union budget for 1984-85, and as stated in the memorandum explaining the provisions of the Finance Bill 1984, the compulsory audit is intended to ensure proper maintenance of books of accounts and other records in order to reflect the true income of the taxpayer and to facilitate the administration of the laws by a proper presentation of accounts before the tax authorities. This would save the time of the assessing officer considerably in carrying out the verification. Time and again, changes were made in the reporting requirements of Tax Audit Report, which not only widened the scope of the audit to an incredible scale, but also has demonstrated the trust and confidence entrusted upon chartered accountancy profession by the government. The Taxation Audits Quality Review Board, under its purview, can review any report prescribed under the Income Tax Act 1961 and rules framed thereunder, and any report prescribed under the indirect tax laws, including the goods and service tax law, which are certified by chartered accountants, being tax auditor, in respect of certain enterprises with a view to determine to the extent possible compliance with the reporting requirements prescribed under various sections of the Income Tax Act 1961 and rules made thereunder. Compliance with reporting requirements prescribed under various provisions of the indirect tax laws, including the goods and service tax law, and compliance with the respective pronouncements, guidance notes, technical guides, etc. issued by the Institute of Chartered Accountants of India. The board may review various reports either suo motu, means on their own, or on a reference made to it in respect of taxation matters, be it direct taxes or indirect taxes, by any regulatory body, including the Central Board of Direct Taxes, the Central Board of Indirect Taxes and Customs, the Comptroller and Auditor General of India, the State Commercial Tax Departments, etc. The board may also review the reports of the enterprises relating to which serious irregularities in taxation matters, be it direct or indirect taxes, have been highlighted by the media reports. The board, wherever finds any material non-compliance with the factors stated previously, it may refer the case to the Director Discipline of the Institute of Chartered Accountants of India for initiating appropriate action against the tax auditor under the Chartered Accountants Act 1949. Now, in case where no material non-compliances are observed by the board and only immaterial non-compliances are observed, the board may not refer the case to the Director Discipline of the Institute of Chartered Accountants of India for initiating action against the tax auditor under the Chartered Accountants Act 1949. What will it do? In such cases, the board will appropriately bring the non-compliance to the attention of the tax auditor by way of an advisory. While giving the tax audit report, the tax auditor will have to use his professional skill and expertise and apply such audit tests as the circumstances of the case may require, considering the contents of the audit report. The tax auditor will have to conduct the audit by applying the generally accepted auditing procedures wherever applicable for any other such audits. Now, he is advised to refer to the standards on auditing issued by ICAI, the guidance note on tax audit under section 44 AB of the Income Tax Act 1961, the technical guide on income computation and disclosure standards, among other pronouncements of ICAI, where the auditor issues Form number 3CB as the audit of financial statements is being done under Section 44AB of the Income Tax Act 1961. The auditor should, in relation to audit of the financial statements, ensure compliance of accounting standards issued by ICAI, standards on auditing issued by ICAI, and framework for presentation of financial statements issued by ICAI. Thanks for watching. See you next time.